If you're an entrepreneur business owner, you've probably heard the recommendation that you should file as an S Corp. But do you know what that actually means? If you're new to my videos, I'm Max, and I've been a corporate attorney for over 6 years, and I've helped hundreds of people form their first business. And I am the owner of the community Easy Startup on School that teaches entrepreneurs how to form their own LLC step by step and has general educational content just like this. And in this video, I'm going to give a brief overview as to what an S Corp actually is, who qualifies to file as an S Corp, when it actually makes sense to do so, and then we're going to walk through an example of the tax savings that you're going to get if you do file as an S Corp. So let's jump right into what an S Corp actually is, and it's not what a lot of people think. So I want to clear up the biggest misconception that people generally have about S Corps, and it is not something that you actually form or file with your state. An S Corp is just a tax election that you make with the IRS. With your state, you either file an LLC or a corporation, and either an LLC or a corporation can elect to be taxed as an S Corp if certain criteria is met. If you have your own LLC and you're a single owner, by default, you're taxed like a sole proprietorship or what's called a disregarded entity. If you have multiple owners, you're taxed as a partnership. And if you're a corporation, you're automatically taxed as a C Corp. Now, one of the benefits of an LLC is you have tax flexibility. So if you're a single member LLC, you can choose to either be taxed as a disregarded entity, you can choose to be taxed as a C Corp, or you can even choose to be taxed as an S Corp. So that's a key concept to keep in mind as we move through this video, is that an S Corp is not a type of business entity. You either have an LLC or a corporation, either of which can be taxed as an S Corp. So item 2, what is the criteria for filing for an S Corp? So the key requirements are generally that you must be a domestic entity formed in the US. So you must be a domestic limited liability company in one of the 50 states. You must have 100 members, which are shareholders of an LLC or fewer, so fewer than 100 owners. Any owners must be US citizens or residents. You only have one class of stock or membership units. Other legal entities like other LLCs, partnerships, or corporations can't be owners of the business entity that you're electing S Corp status for. And there's certain business types that can't be taxed in an S Corp, like certain investment institutions or insurance companies or things like that. But if you're a small business owner, like a single member LLC, these requirements usually aren't an issue. It's usually when you should file. So when is a good time to file? Well, that's going to depend. A lot of states are different, and every individual business is going to have individual circumstances or a best time on which they should file S Corp status. So I would highly recommend that anyone watching this video go consult with a small business accountant to receive tax advice before proceeding with filing with an S Corp. But if you just Google it, there are some pretty typical circumstances under which you should file as an S Corp. These circumstances are if your business is consistently making monthly recurring revenue, if your business is making what would be considered a reasonable salary for your role in the company, or if your business is making enough revenue to pay a tax professional or other service provider to handle the payroll and additional compliance that goes along with filing as an S Corp. And for those of you that are looking for a number, if you're making $50,000 a year consistently or more, that would be a good time to go consult with a tax professional on whether you should file for an S Corp. So with all of that being said, let's jump into my computer and I will show you guys an example of how much money you can actually save on taxes by filing as an S Corp. So let's say your LLC makes $100,000 a year pretty consistently and you've not filed for an S Corp yet. Now you're going to pay income tax on that $100,000 as well as this 15.3% self-employment tax, which would come out to $15,300. Now let's say you file for S Corp status. This is where it's going to be very important for you guys to consult with a tax professional because they're going to be able to educate you onto what is a reasonable salary for your specific business and for your specific role in the company. But let's just say, for example, that your reasonable salary and your tax professional that you consult says that that's about $60,000. That $60,000 is still subject to the 15.3% tax we just talked about. However, the remaining $40,000 is going to be taken as a distribution and not subject to self-employment tax. However, it's still important to note that it is still going to be subject to your income tax, but that is still going to save you $6,120 if you're just making $100,000 a year. So if you're making over $100,000 a year, just imagine how much more money you would save in taxes by filing as an S Corp. Now, one last thing to mention, as I said before, is that when you do file as an S Corp, you're going to have additional costs that come with this, like payroll services, bookkeeping, and possibly tax preparation fees. So you have those to factor in. But considering you're going to be saving a significant amount of money on tax, which if you're a business owner is likely your largest expense, this can be well worth it. So to recap, an S Corp is not something you form. It's a tax election that you make with the IRS that's either going to apply to the LLC that you already have in place or the corporation that you already have in place. And as long as you meet the criteria to do so, it really makes sense when you have the profits to justify the costs and maintenance that go along with filing as an S Corp. So if you're running a profitable business and have not looked into this yet, I'd highly recommend that you go, again, reach out to a small business accountant to get this handled and see if it's something that works for your business. And if you want to learn about the legal side of owning a business, feel free to subscribe so you don't miss a video. And you can also join my community Easy Startup, which again teaches entrepreneurs how to form their own LLC step by step. And a quick ending disclaimer, nothing in this video was individual legal advice nor individual tax advice. I am not a licensed tax professional, and all of this was for general educational purposes only and does not form an attorney-client relationship between you or I. But I hope you guys found this video helpful, and I will see you in the next one.